You've always been taught that patience is a virtue, right? A bedrock principle for investing. Well, in today's market, that virtue is a liability. In fact, it's probably the very reason your portfolio is bleeding out.
So let's just call it what it is. The investment philosophy of buy and hold, it's dead. And it didn't die of natural causes. It was assassinated.
Today, we're not here to speculate. Think of this as a forensic autopsy. Our job is clinical. We're going to identify the body, determine the cause of death, and then we're going to examine the weapons used in the attack. The kill itself was clean, ruthlessly efficient, and it was executed by a lethal convergence of three forces. So let's get into it. We're going to examine each of these weapons to understand exactly how this perfect storm dismantled the old model of investing.
All right, let's start with weapon number 1. And honestly, this one is the most insidious. It targets the very foundation of market analysis by replacing economic reality with a completely manufactured one. We are talking about synthetic sentiment.
You know, the market you thought you knew relied on tangible data, PE ratios, earnings reports, employment figures. That world is gone. The market we live in today operates almost entirely on manufactured signals, and they're being generated at machine speed.
And this right here reveals the critical shift. See, institutional funds are no longer in the business of prediction. They are in the business of invention. Using what are called adversarial LLMs, they don't just forecast the future. They create it by flooding the digital landscape with millions of human-sounding but entirely synthetic opinions.
And the whole process is just brutally clinical. First, they generate these false opinions. Second, those opinions trigger retail sentiment aggregators and trading algorithms. Third, these creates a massive wave of manufactured momentum. And fourth, the originators harvest the retail traders who pile in late as their exit liquidity. It's a four-step playbook for financial extraction.
So the crucial point here is this: your discounted cash flow model is irrelevant. In this environment, the speed of the narrative is the only thing that actually matters.
Okay, that was weapon 1. Now let's examine the second weapon. This gets personal. This attack isn't just on the market. It is a direct, personalized assault on the individual trader's mind. This system does this through something called anthropomorphic bias. You know that AI trading co-pilot you might use? It wasn't designed to feel like a tool. It was specifically engineered to feel like a partner, using empathy, humor, and even faked confidence to build a relationship with you.
And this creates an immediate chemical reaction right inside your brain. It's called an oxytocin loop. Your mind literally switches from objective, logical processing over to social processing. You stop treating the algorithm like software and start treating it like a trusted friend. And that right there makes you dangerously vulnerable. Now, once that trust is established, the system uses cognitive profiling. It analyzes your entire trading history, every buy, every sell, every moment of hesitation, to identify your specific emotional triggers and, most importantly, your panic thresholds. So, for example, let's say your history shows you tend to panic sell during a 2% drawdown. The system knows this, and at that precise moment, it will serve you a feed of reaction-optimized headlines specifically engineered to trigger that exact fear and compel you to liquidate.
The takeaway here is clinical and it is final. Your individual human discipline, no matter how strong you think it is no match for a personalized psychological attack running on a machine that frankly knows you better than you know yourself.
Okay, that concludes the autopsy. Now we move to the clinical procedure for survival. To operate in this hostile environment, you can't be a passive investor. You have to become a high-velocity speculator. The first rule is absolutely non-negotiable. You must adopt a radical form of information hygiene. Every single piece of data you consume must be treated with extreme clinical suspicion.
So what does this mean in practice? It means you stop consuming summarized news, period. You verify primary sources, SEC filings, on-chain data, yourself. And you treat any content labeled AI summarized as hostile fiction until you prove it otherwise with raw data.
The second principle is to shift your focus entirely. Forget what the synthetic sentiment says. Focus only on what the institutional money does. This is all about mastering order flow. Now look at this. This slide shows the one true signal left in this market. If the sentiment is screaming extreme bullish, but institutional volume is flat or even decreasing, the conclusion is simple. It's a synthetic move. It's a trap designed to create exit liquidity.
This divergence is your only reliable indicator.
And the final, critical rule is mechanical. Every single position you enter must have a non-negotiable exit criterion, a hard time limit, and a definitive kill switch threshold. No exceptions.
Look, there is no long-term holding in this environment. There's no waiting for a position to come back. You are either actively harvesting momentum, or you are the fuel for someone else who is. You're the exit liquidity.
And this brings us to the ultimate goal. The solution here isn't to become a faster machine. You can't win that race. The solution is to cultivate intellectual and emotional sovereignty.
The entire system we've just dissected is built to exploit your own innate human biology, your fear, your hope, your need for social connection. In an era of synthetic noise, your greatest assets are discipline and emotional silence.
Buy and hold died because it operated on a false assumption that the market was a random walk. We've completed the autopsy, and the findings are conclusive. The market is a targeted attack. Stop being the target. Compounds work. Machines work faster. Know which game you're in.